profit-taking activities continued at Nigeria's equities market for the fourth consecutive session, and I have Muktar Mohammed, he's an analyst at Assar Investments. He joins me now as we look at how to play in the equity space this week. Thank you so much for your time on the show today, Muktar. And let's look at how the market is playing out and what we can expect as we go into the week. We're seeing the bears continue to hold sway.
Yeah, well, thank you, Kenneth. Good afternoon. I think the market went down today as expected. We've had so much rally through the week. So, like I always say, as long as the type of investors we have in the market are still the short-term players, those investors that used to be in the treasury sector, the fixed income sector, the bond sector, the one that are coming into the market to look for better rate because of the poor rate in this other sector. We'll continue to have this up and down, but we intend to see some equity coming to their new high for after a very long time. So we see how they can sustain that moving forward, and if we're expecting the third quarter results for most of this equity before the end of this month or early first week of November. So that could just be the trigger that could finally sustain the kind of movement we are seeing in the market.
All right, but investors looking to invest in Nigeria space right now, looking at what the vagaries between the fixed income and the fixed income markets, treasury bills market, and also looking at what's playing out in the equities today, where would you advise to stick their naira on?
Kennedy, I think I would advise anybody to go into the equity market for now. It seems to be the best in terms of returns compared to the fixed income, the treasury bill, and the bond market, because of after the pandemic, it seems that the companies that are listed in the exchange recover earlier than any other. The second quarter results were better than expected, and so going forward, we expect better things to happen in the third quarter. And the crown of most of these equity are having a very low valuation compared to their peers all over Africa, and even in terms of their earning per share, PE ratio. Some of them are in the all-time low. So, for me, anybody that is coming into the Nigerian market, I advise them to go into the equity market for now, because that seems to be where you can have better return in terms of capital appreciation and also dividend payout going forward.
Now, let's look at the sectors that could unlock this value that we're talking about here. We saw strong gains from the banks last week, about 7.8% when you look at it week to date. Can this momentum be sustained in the banking sector this week?
Well, the banking stock, if you see the kind of gain they had to do with their third quarter results that came in, second quarter result that came in, and then secondly also have to do with their low valuation. And so I think those are the two things investors were looking at, and most of the investors are positioning in this equity for the long-term return, because most of the investors that were in the fixed income space are looking at that sector in terms of dividend payout and capital appreciation. How sustainable is this run? I keep saying that we might not be able to sustain it. We can only sustain it if we have an exchange rate that is very constant, is very stable, and also if the third quarter result and then the final year result from most of it, so the banking stocks are able to come out very good. If we don't do that, I don't see how we can sustain the kind of run we have seen. But in the short term, I don't see a sustainability of that run because of profit taking. But in the long term, I can assure you that we'll have better returns than any other investment product in the Nigerian market at the moment.
All right, but let's look at the industrial goods space and the consumer goods space as well. Looking at how things are played out in the country with the NSAS movement, do you think we could see business activities being disrupted and could see that play out to impact some of these companies?
Well, with the government sector, you need to look at the earning capability of Nigerians, the purchasing power of Nigerians. If you look at that by what we see, by that you can begin to say that you don't think that the conglomerate sector is a sector anybody want to play in now, because like I said, the purchasing power of Nigerians has come down in terms of you look at the value-added tax there also. Also, you look at the pandemic that came in, a lot of people have lost their job. So, and what we are seeing in the Nigerian space now, we are seeing a lot of households trying to reduce costs in terms of the product that they consume at home. So when you look at that and by the volatility of the exchange rate also, you realize that this sector is not exciting investors so much unless we begin to see a stable exchange rate. We see the consuming and the purchasing power of Nigerians comes up, so they are able to purchase more. And you and I know that such things will take some time before we begin to see such results. So for now, the consumer risk sector is not a space that I would advise investors to go in. And if they have to go in there, they have to go in with a lot of caution.
All right, now a lot of caution. Muktar says definitely quite a lot to look at in the markets. Thank you so much for your time. I've been speaking to Muktar Mohammed. He's an analyst at Assar Investments.